Hi, my name is Shannon Ryan, and on behalf of Tulane University's Burkenroad Reports team covering Pool Corporation, including Haley Burke, Tyler Chamberlain-Simon, and Aaron Moorfield, I would like to welcome you to the Pool Corporation video report. Pool Corporation trades on the NASDAQ exchange under the ticker POOL. Our team developed a 12-month target stock price of $42 per share, consistent with Burkenroad Reports' market perform investment rating. Pool Corporation is a wholesale distributor of pool supply products and landscaping and irrigation products. The company sells directly to retailers and contractors, aiming to serve as a one-stop shop for its customers' pool construction, maintenance, and landscaping product needs. Pool Corporation operates worldwide, with its U.S. business focused in Florida, California, Arizona, and Texas, and several locations in Canada and Europe. Pool Corporation was founded in 1993 as SPC Holding Corp. And began as a pool supply distributor in the southern United States. Headquartered in Covington, Louisiana, Pool Corporation added irrigation products to its product offerings in 2005 with the acquisition of Horizon Distributors Incorporated. The company operates its branches through three networks: SPC Distributors LLC, Superior Pool Products LLC, and Horizon Distributors Incorporated. Pool Corporation sells its products to 80,000 wholesale customers and operates over 290 locations worldwide, making it the largest wholesale distributor of pool supplies in the world. Pool Corporation breaks its product lines down into its blue business, meaning pool supplies, and its green business, referring to its irrigation products. The company's blue business generates 92% of its sales revenue, and its green business makes up 8% of its revenue. Pool Corporation's blue business products are 35% retail, 35% minor repair and service products, 20% replacement and refurbishment products, and 10% pool construction products. Since the financial crisis, Pool Corporation has shifted its business to mostly non-discretionary products, with 70% of its sales completely non-discretionary and only 10% purely discretionary. This product shift has allowed Pool Corporation to be successful even in economic downturns, since non-discretionary products are not usually purchased with disposable income.
Over the past 5 years, Pool Corporation's stock price has approximately doubled, from around $20 per share in 2007 to $41.61 per share today. There is the obvious drop caused by the recession in 2009, at which point the price per share fell to $11.59. But since that point, the stock has made a fairly steady climb. This climb in share price, despite still troubled economic times, is due in part to the company's non-discretionary products. While Pool Corporation gained some of its revenue from new pool construction, which has decreased considerably since the recession, approximately 70% of its revenue comes from non-discretionary recurring purchases. Another major factor that has helped the company grow is the quality of the management team. We spoke to several other analysts following Pool Corporation, and all agreed about the strength of management. Most of the officers have been with the company for several years and have a comprehensive understanding of the industry. The company has repurchased many of its own shares over the past 2 years. In 2011, Pool Corporation repurchased a total of 2,823,666 shares at an average price per share of $25.15. In August 2012, a new $100 million share repurchase program was authorized by the Board of Directors. Since its first share repurchase program in 1999, Pool Corporation has repurchased a total of $516.7 million worth of its shares. This signals that management believes in the strength of its own company. Some important figures to take note of are the company's return on equity and earnings per share. Pool Corporation has a 25.5% return on equity. As you can see from the graph in the bottom left, this is up from its bottom of 17.6% in 2009, but has not yet returned to the peak level it reached in 2006. We believe this means there may still be room for it to increase as the company grows. The company's diluted earnings per share is shown in the bottom right corner. This follows a similar pattern to return on equity, in that it has reached its low of 93 cents in 2009 and has recovered significantly since then, now lying at $1.47. This, too, is below its high of $1.74 in 2006, and we believe it has potential to reach that level again in the coming years as the company expects revenues to increase. The industry in which Pool Corporation operates is unique in that it does not have any major peers or competitors. As you can see from the graph, the company has as many sales centers as all of its competitors combined. A good portion of these competitors are small regional businesses with less than 10 distribution centers. It has been Pool Corporation's practice in the past to acquire these smaller companies in order to expand the areas in which they service. A discussion we had with Craig Hubbard, the Chief Financial Officer of Pool Corporation, clarified that the company plans to continue with future acquisitions. Additionally, there are many buyers within the industry, and none of them hold a large market share. Of Pool Corporation's 80,000 customers, none account for more than 1% of sales. This fragmented market keeps one buyer from being able to control pricing. The industry as a whole has opportunity to grow as more family homes decide to install a pool. Since it is a cyclical industry, it is likely that this will not happen until a recovery in the housing market is fully recognized, but there is opportunity out there in the future.
In order to begin our valuation of the company, we considered business fundamentals to project a future outlook for Pool Corporation. First, we forecasted that Pool Corporation will see accelerated growth from market recovery and catch-up demand. Since peak levels in 2005, Pool Corporation has seen a 30% decline of refurbishment and replacement activities due to unfavorable macroeconomic conditions. As the market recovers, households are now more likely to go through with more costly replacements and refurbishment expenditures that they had previously deferred for more minor repairs. We agree with Pool Corporation estimates that future revenues from these deferred purchases could total as much as $300 to $320 million from 2011 to 2018. Second, we estimated that specifically pool construction and the green or irrigation businesses' growth will lag behind the replacement and refurbishment growth. These parts of Pool Corporation's business are more closely related to the housing market and housing construction. Despite the fact that many economists believe that housing is at the beginning of a recovery, a true pickup in housing could take years to show a positive effect on the company's green business growth. We see this uncertainty and the timing of the housing industry recovery as a possible problem for the company's near-term success. Third, we believe the company will continue to increase their market share through acquisitions. Pool Corporation's business strategy has always used acquisitions to expand their market share. The company continues to look for appropriate businesses to acquire in order to penetrate new markets, and most recently is planning acquisitions in South America. We believe Pool Corporation will be able to properly manage the acquisitions in new markets, bringing in additional profits for the company. One of Pool Corporation's main selling points is its strong financial position, which is made possible by its strong management team. The company has maintained a gross margin between 25% and 30% for the past 10 years, even throughout the most recent recession. We believe that the company will continue to maintain its strong cash position and high gross margin in the near future, which will facilitate share repurchases and acquisitions. These share repurchases and acquisitions will in turn create value for the shareholders.
In order to come up with the future target price for Pool Corporation, we used two different valuation methods, the price-to-earnings method and the price-to-book value method. We decided these two methods were appropriate because the price-to-earnings ratio and the price-to-book value ratio have been consistent in the past several years, and we project Pool Corporation will continue to receive strong returns on its assets. We decided to use Pool Corporation's historical financial data for both methods because Pool Corporation does not have any comparable peers due to their large market share. In our price-to-earnings model, we predicted earnings per share to be $1.87 in the next 4 quarters, while Pool Corporation averaged a price-to-earnings multiple of 22.26, giving us a target price of $41.69. In our price-to-book value method, we calculated next year's book value per share to be $7.45, while the average price-to-book value ratio is 5.69, yielding a target price of $42.37. We then averaged the two target prices and rounded to the nearest whole number to get our target price of $42. To assess the attractiveness of Pool Corporation to investors, we completed a Ben Graham analysis. A Ben Graham analysis uses 8 calculations to determine the overvaluation or undervaluation of a stock. Each calculation can be viewed as a hurdle for a stock to clear. The more hurdles cleared, the more attractive of an investment a stock is. Pool Corporation passes 3 of the 8 hurdles. Its current ratio exceeds 2, its dividend yield was more than 2 times the Treasury rate, and its earnings to price yield was more than 2 times the Treasury rate. 2 of the 3 ratios may simply indicate how low the current Treasury rate is. Regardless, 3 cleared hurdles are not enough to render Pool Corporation an attractive investment. While we believe Pool Corporation will provide a steady return in the future, we also believe that there is a low possibility of seeing large growth in earnings. Please note, Burkenroad reports are produced solely as a part of an educational program at Tulane University's Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. Before investing, you should consult a professional investor and/or conduct your own primary research. Thank you for listening to our presentation.